Hello, and a warm welcome to each and every one of you. I'm Frenzo Fourie-Brieg, Head of Marketing for Momentum Investments. We are coming to you virtually from the James Hall Museum of Transport here in Johannesburg. I must say I'm amazed by the displays here at the museum. I'm also astonished to see how far we've come, especially the pace of the evolution in the latter decades, where today, autonomous electric cars aren't part of science fiction anymore. How does this translate to investments? If we look back at the long history of Momentum Collective Investments, we have paved the way for large parts of the journey, and you can really see how far we've come. This is indeed a focused, simplified message, one that fits directly with our philosophy of investing to help achieve our clients' goals.
Good day, everyone. Recently, we articulated a new strategy for MFP, and as part of that, we made a commitment that we would want to be the most professional, most accountable, and most competitive financial planning agency in this country. But we also had a critical look at our investment value proposition, and we have therefore decided to bring you something which I'm so excited today, that would give you something more than just being the best in financial planning, but also have a value proposition that you would be proud of. And how we've gone about it is we realized that if we would want to be competing with world-class wealth management businesses, we need to have an advice-led investment value proposition that goes beyond financial planning. Yes, we needed to include a couple of things. We needed to make sure that investment planning and the risk profiling process is actually linked with sound investment principles and a solution that would be outcome-based from a client perspective and focus on their expectations. And then obviously resulting in an incredible experience for a client and yourselves that will give you so much comfort and trust that you would never want to put your money anywhere else. Now, why would we do this? Do this because if you were to look in terms of our own performance over the last couple of years, we've seen that only 26% of us in MFP has outperformed inflation plus 3%. And then another third has actually given a return between CPI and 3%. And 40% of us actually gave our clients a really poor experience. We cannot afford to continue like this. If we want to be the best and have the best solution and compete with wealth management businesses, we need to have a uniform way in a solution that you would be proud of and give you that comfort and trust. And let's have a look at what we bring to you today.
No one can say exactly who invented the wheel, but around 5,500 years ago, it changed the course of human civilization, and we haven't looked back.
During the years, we've seen our society and our technology evolve on an immeasurable scale, propelled onward and accelerated forward by endless variations on a basic idea.
We have been limited only by our imagination. Investment is no different. The way we invest today is a product of continual evolution.
Taking a simple, sound idea and building on it, refining it day after day, year after year.
Behind that evolution is a forward driving force. Its name? Momentum.
To see how far and how fast we've evolved, let's travel back to just a few decades.
Before 1965, investing was the exclusive domain of the wealthy. Who else could afford to invest by buying shares and bonds? But in that year, it all changed when the first unit trust was launched in South Africa by Sage, a company we acquired later on that forms part of our DNA today.
This evolution opened investing to the man in the street. The wheels were in motion, and we would never look back.
By the end of the 80s, the industry had grown to around 30 unit trust funds. The market was on board, and we were in the driver's seat, mapping out new paths for our investors.
Today, there are more than 1,500 unit trusts. That's more than the actual shares on the JSE.
But before we jump ahead, let's travel back to the 90s. We'd like to show you what drives us.
1994 was a landmark year for our country, ushering in our long fought for democracy, a time of immense optimism and renewed faith in investment.
In 1995, we cruised ahead when Advantage Asset Managers, a company that was incorporated into Momentum a few years ago, pioneered multi-management in the South African investment market.
In 1996, we were the first life insurer that introduced a linked investment service provider, or better known as an investment platform, that enabled investors to select products that invested in underlying unit trust funds.
Clearly, our product offering was evolving as fast as the times were changing, and we were living our brand promise of making it personal.
Now you might ask, what makes it personal for us? After all, we are all about numbers and stats, as well as balancing risk and reward.
But that's just what we do. How we do it is what makes the difference.
The introduction of outcome-based investing in 2017 was a milestone in the evolution of Momentum.
Instead of measuring success against arbitrary benchmarks like security exchange indices, we measured it against our clients' personal goals.
We understand that everyone is different. You don't invest just for the sake of investing.
You invest to make your dreams and aspirations come to life. With us, investing is personal.
Driven by this insight, we are going to help you evolve with us. We have listened to you, our partners, on the client's journey to success.
We understand that advisors evolved and that choosing the correct funds when constructing a portfolio from the hundreds and hundreds of unit trusts is a challenge.
As if the low growth environment in markets have not been challenging enough. Therefore, we have aligned our offering to better suit you and your clients' changing needs.
We are making sure that we give you the tools and support you need to achieve your personal best in an increasingly competitive marketplace. To achieve that, we had to reassess everything at our disposal: our products, our people, our systems, and our infrastructure.
And harness them to work smarter, faster, and yes, simpler than ever.
So, what did we do? We finessed our multi-asset class and single asset class funds to make it even more personal by giving you the choice you need as part of your advice process. Starting with simplifying the range of funds available from Momentum Collective Investments. Not just cutting down, but aligning and simplifying our range so it will help you achieve your clients' goals.
How to access our funds and capabilities is also evolving. We have seen the rise of the discretionary fund manager, or DFM, as it is known in the industry, not only in South Africa, but globally.
This evolution of investment advice has urged us to provide advisors and their clients with the expertise and efficiency that a DFM brings, while keeping to our core investment philosophy of outcome-based investing. Today, we are bringing together the best investment thinking with the most efficient investment implementation.
Our range of unit trusts and model portfolios can be accessed on the Momentum Wealth platform. These tailored solutions are more closely aligned with your clients' financial needs, and we want to partner with you.
Talk to us today for more information and become part of the growing community of financial advisors using our funds to help their clients achieve their financial goals. It's going to be more exciting than ever before.
So, as we stand ready to take on the next decade, we'd like to extend a warm, personal welcome aboard. Fasten your seatbelt.
We're embarking on the next stage of our evolution, and it's personal.
And now, for the first of two speakers to tell you more about the evolution of their businesses, Kapil Joshi, Head of Momentum Collective Investments.
Momentum Collective Investments is the Momentum Metropolitan Group's collective investment scheme manager. We construct the group's unit trust funds. Our range of funds includes single asset class, local and global specialist funds across the risk and return spectrum. These funds have a credible long-standing track record and can compete on a peer relative basis with the best in the industry. We have the solution. whether it is in equity, fixed income, property, alternative investments such as hedge funds, or global investments. The range also includes our flagship multi-asset class funds. It is these multi-asset class funds with which we launched our outcome-based investing philosophy to the South African market in 2017, which is a philosophy we pioneered, built specifically with client needs and objectives in mind. Our assets under management exceeds 90 billion rand at December 2020, and we have seen significant growth in market footprint. We have a broad spectrum of clients, ranging from individual investors to business investors, such as retirement funds, state-owned entities, other companies, and discretionary fund managers that include our funds in their model portfolios. This has been an area of significant growth, with an about 4 billion rand or 200% increase in assets under management of Momentum Investment Consulting, also known as MIC, in the last 5 years. We have a long history in the South African unit trust industry. Momentum Collective Investments was established almost 3 decades ago. It was originally known as RMB Unit Trust before the unbundling of Momentum Metropolitan Holdings from the First Rand Group, and was one of the first management companies in South Africa. Of interest, in addition to organic growth, our growth strategy has in part been through strategic acquisitions and mergers. And as such, through our acquisition of Sage, some of the first registered collective investment schemes or unit trust funds ever offered in South Africa continues today in the Momentum Collective Investments range. As a collective investment scheme manager, the 3 main aspects that underpin our business are ensuring we use the best of class investment management skills and intellectual capital when it comes to the management of our range of funds, providing superior client service, and incorporating best practice principles from a regulatory perspective and on the compliance side. On the regulatory front, we offer a brand that has a strong reputation for ethics, honesty, integrity, and transparency, as well as stability and governance. We engage continually with the industry bodies and work non-stop to make sure the legal and regulatory compliance of all our processes and procedures is constantly improved. From a client service perspective, we have a digitized onboarding process to help clients navigate our range of funds, and you can look forward to our market-leading reporting functionality to clients that is built around their needs and objectives. During the past few years, we have also expanded the team and we have invested in specialized distribution skills. Our fund specialists work closely with the broader Momentum Investments teams and can add value to the advisor's office by providing asset class views, fund insights, and economic views generated by research and insights team. But it's on the investment management skill set that we want to focus on today. During the past 3 decades, our investment management capability has continually evolved. We are always innovating and establishing investment trends in South Africa. We introduced multi-management to the South African investment market in 1995 through Advantage Asset Managers, the company that was incorporated into Momentum. And as such, we are the founder of multi-management portfolio administration in South Africa. Our outcome-based investing philosophy speaks directly to this innovation. Not only did we pioneer this philosophy in South Africa, but our experts push the boundaries to create innovative and tailored solutions that can help financial advisors and their clients achieve their personal goals. Because with us, it is personal. We don't simply create unit trust funds to outperform arbitrary benchmarks. We focus on what financial advisors and clients need. We create unit trusts that fit into the advice processes of financial advisors so they can solve their personal client outcomes. We would now like to take a moment to introduce our investment management team for the single asset class funds and the multi-asset class outcome-based solutions. The investment management team has 67 investment professionals and 528 supporting staff. This investment team has earned their stripes. These professionals have experienced many periods of market turbulence, including the dot-com bubble of 2001, the global financial crisis of 2008, and the most recent market crash of 2020, to mention a few. The investment team also manages other assets, apart from the 90 billion that they manage for Momentum Collective Investments. In total, they manage more than 600 billion. Emily, tell us a little bit more about our multi-asset solutions.
Our multi-asset class investments have proven track records and reflect the latest investment thinking to match your investment needs. Together with our research and insights team, we offer extensive asset allocation, management style selection, and optimizing capabilities, as well as individual investment mandate research capabilities. This puts us at the forefront of providing outcome-based solutions.
From an equity perspective, Our indexation investments provide equity benchmark returns at low cost by replicating benchmark indices. They provide certainty that investment returns would be in line with index returns. Our smart beta investments are diversified across multiple investment strategies. They often exceed the returns of equity or index tracking investments, but with low fees. Our fixed income investments are aimed at investors who wish to generate a high level of income from the investment at a lower level of risk. These investments give you access to the interest-bearing markets in South Africa. They can vary from low-risk cash investments to medium-risk bond investments. Our Momentum Enhanced Yield Fund was named the best South African interest-bearing short-term fund for risk-adjusted returns over a 5-year period at the Radian Bull Awards for 3 years in a row now. Our property investments offer you yields in the form of dividends paid once a year and capital growth over time. We have a long track record of being one of the leading listed property investment managers in the country.
Our offshore capabilities are managed in London by Momentum Global Investment Management, which was established in the UK in 1998 and continues to evolve with an ever-changing investment landscape. It's an investment-driven business that focuses on tailored solutions for a diverse client base.
Our range of funds offered can be accessed directly by selecting them on our Momentum Wealth platform or on other linked investment service provider platforms that have our funds available, or by using one of the many discretionary fund managers that incorporates our unit trust as one of the underlying building blocks. For example, our very own Momentum Investment Consulting. Our multi-asset solutions and our single asset solutions are continuously reviewed for fee competitiveness, and we can proudly say that we have a range of funds and solutions that are incredibly well priced. Furthermore, we have also moved away from charging performance-based fees ourselves.
Thank you, Karishma. See you guys later.
I personally want to extend an invitation to you to become part of the growing community of financial advisors using our funds in helping their clients to achieve their financial goals. It is our commitment to make sure that by choosing us, you will experience a trusted partnership for the long term. Because for us, it is personal and also for you. Contact us today by speaking to a Momentum consultant or a fund specialist, or even visit momentum.co.za.
The explosion in size and complexity of investment markets, combined with increased regulatory pressure, has led to the global rise of the discretionary fund manager, also known as a DFM. In South Africa, advisor practices have evolved in recent years, and it is estimated that between 15% and 20% of retail investments are either being managed or advised by a DFM. Discretionary fund management is a form of investment management where investment decisions such as deciding on the funds that make up the investment portfolio and their weightings are made at the investment manager's discretion within the limitations of assigned mandate. Because of this, the client must have the utmost trust in the investment manager's capabilities.
Momentum Investment Consulting, or MIC, is a discretionary fund manager. The company was established in 2008 and is part of the Momentum Metropolitan Holdings Limited Group. This means our team of portfolio managers has access to the larger team of about 60 local and global investment professionals at Momentum Investments, from which we can leverage to construct the best solutions for our advisors and their clients. We also provide investment consulting services to Category 2 financial services providers.
We've identified that there's a disjoint between the portfolios in the market and investors' financial needs. We bridge this gap by tailoring solutions that are more closely aligned with our clients' financial needs than arbitrary portfolio benchmarks. For this reason, we follow an outcomes-based investment philosophy, which means that our portfolios are constructed and managed based on the following 3 pillars. We define the time horizon. We determine an acceptable level of risk and reasonable return target. Risk and time horizons should be aligned with our clients' unique financial circumstances, while reasonable expected returns will determine the level of savings required or maintaining sustainable income.
Once we have defined the above, we apply our 3-step portfolio construction process, which consists of firstly, multi-asset class, which is where we blend the right asset classes for optimum risk management. Secondly, multi-strategy. Here we choose the most appropriate investment strategies that enables consistent returns in very dynamic market conditions. And lastly, the multi-mandate step, which involves choosing the best of class investment managers or mandate design and selection, whether that be active or passive.
We are an independent, advice-led investment business. We partner with financial advisors to construct investment solutions that are closely aligned to the advisor's unique advice process and hence the investor's personal financial needs. We believe that our understanding of the financial advice process is one of our key strengths. We are a client-centric business, and our clients often cite our flexible execution of our investment skill, regular communication, and transparent and detailed reporting as the things they value the most. We believe this is reflected in how we have grown our support base of financial service providers, which led to significant growth in our asset base as we reached 9.1 billion in assets under management in December 2020. Consistency is an attribute we place the biggest emphasis on. We construct diversified and resilient portfolios within the 3 pillars discussed before. Risk management, therefore, is core to our portfolio construction process. We understand the inherent risks of a single asset class strategy or investment mandate to the risks that arise as you blend them all together. We don't believe that all investment managers have skills in all asset classes, so we prefer to select the most appropriate investment manager per asset class or investment strategy. We use a combination of active, passive, and smart beta strategies, depending on the appropriateness and availability of each of these in various asset classes. Although we follow the same philosophy and process locally and globally, we do rely heavily on our global team, the Momentum Global Investment Management team based in London, to give us guidance on global markets because they're a lot closer to it than we are. The portfolios are continually monitored to make sure we remain true to our philosophy and that we deliver on our promise to our clients.
Our team consists of CFA charter holders, actuaries, and certified financial planners. This allows us to consider the various effects of decisions taken in managing client portfolios from a range of perspectives. This allows us to narrow the gap between investment and the advice to ensure better outcomes for our clients.
Our clients receive customized reporting in the form of monthly co-branded fact sheets, quarterly economic and investment return reports, as well as ad hoc reports relating to markets and underlying funds and strategies. We engage regularly with the advisors that use our portfolios in their advice process to make sure all stakeholders are kept abreast of the drivers of historic returns and they have reasonable expectations in terms of expected forward-looking returns. The ability to implement any decision simultaneously for all clients invested in the portfolios is one of the biggest benefits of using a DFM.
A DFM should become an extension of an advisor's practice. Advisors who do not use a DFM select the underlying funds they are familiar with and they believe are most likely to meet the needs of the investors. But unless they have the skills in asset allocation, portfolio construction and optimization, as well as investment manager selection, it's unlikely that they can replicate what a DFM does. While they may be able to outsource some of these skills by investing in balanced portfolios, very seldomly are these balanced portfolios aligned to the advisor's unique advice process. They will also have to meet with each client and get their signed consent to make these changes. That is one of the efficiencies that a Category 2 license brings. A DFM can apply asset allocation or fund manager changes simultaneously across all advisors through its ability to switch in bulk.
By outsourcing these skills to an expert and using the efficiencies that a Category 2 license brings, advisors are removing the investment compliance risk from their practice. A recent study done by Momentum Investments analyzed how investment funds were selected initially and any changes to portfolios along the journey. The study focused on how switching behavior detracted from long-term investment returns and the negative effect of using past returns to make the initial selection. Of particular importance is how switching behavior in periods of high market turbulence destroys the most value at about 1.1% per year. Here, the value a DFM adds is that there are investment professionals making these decisions for you to minimize the behavior gap.
Some advisors also have their own Category 2 licenses and benefit greatly from our consulting capabilities. Although these advisors can legally provide the services we have just mentioned, many are smaller firms without the necessary comprehensive skill set. In these instances, they often appoint us in a sub-advisory role. A full skill set is available to these clients. This allows them to enhance their own investment process. Most importantly, they also have access to our portfolio managers who will ensure ongoing portfolio monitoring, and they will timeously warn against potential risks and opportunities.
We are inherently different. We follow an outcome-based investment philosophy, which can help financial advisors achieve their clients' goals on their investment journeys, because for us, it's personal.
Our range of solutions consists of standard portfolios and highly customized solutions. In our customized solutions, we rely heavily on the input from the advisor or group of advisors to assist us in defining the 3 pillars of our investment philosophy. Our portfolios are available on the majority of the leading investment platforms in South Africa. The range of model portfolios offered by Momentum Investment Consulting can be accessed by logging onto our website, or you can contact us via email. Talk to us today for more information and become part of the growing community of financial advisors using Momentum Investment Consulting in helping their clients to achieve their financial goals. Speak to a Momentum consultant or visit Momentum Investments at momentum.co.za. Because for us, it's personal.
Thank you, Flof. This is really an exciting evolution, as a DFM brings a lot of value to advisor practices in the form of efficient portfolio construction, enhanced reporting, and simplified administration to increase efficiency in your businesses. For me, one of the most thrilling parts of this evolution is the opportunity for many advisors to experience something entirely new. We know many advisors have never had the opportunity to bring the capabilities of a DFM into their practices. The rise of the DFM and outcome-based investing are really global investment phenomena. There are capabilities we are bringing to you that can truly help evolve your practices.
Good morning, Momentum Financial Planning. We are super excited to be joining you this morning with regards to some new capabilities that we are launching to you. But before we get to that, let me introduce you to the lovely people that are with us this morning, take you through this conversation. To my left, we've got Flobella Yates. She heads up Momentum Investment Consulting, our discretionary fund manager. In her team, we've got Dean D'Souza, who's the portfolio manager for the capabilities that we'll be talking to you about today. And on Dean's left, we've got Rupert Hissing, who is the business development manager and who will also be spending a lot of time with you post the launch of what we'll be sharing with you today. Now, I think it's important to move the conversation to why we're here. Let's start off by saying that the go-to-market strategy, and wait, let's just pause a minute. What is a go-to-market strategy? The go-to-market strategy is basically saying that there's a partnership, an alliance forming between Momentum Financial Planning and Momentum Investments that is looking to help deliver better advice outcomes, but also importantly, looking to partner the two businesses closer together to ensure that we deliver the right capability sets to you. So with that in mind, the way we're looking to do this is through a concept called vertical integration. Let's now talk about vertical integration. And importantly, before we even get into anything, let's define vertical integration. Vertical integration is essentially bringing together 3 components of this exciting value chain. Those 3 components are advice. This is your area of expertise. This is probably the most important conversation that needs to happen, and your role cannot be emphasized enough in the advice landscape. This is the role that you have with your client. It then moves into our platform ecosystem. Our platform ecosystem is as important for this journey as any other. And what we mean by our platform is it's Momentum Wealth and Momentum Wealth International, your beloved platform. The last component of the conversation is the solution domain. The solution domain is where we house our outcome-based investing philosophy in the form of the capabilities that we'll be launching to you today. And we are incredibly proud of the evolution that we have put together in partnership with Momentum Financial Planning for what it is that we'll be talking to you about today. Flobella, or as we like to call you, Flof. As many financial planners in Momentum Financial Planning do not currently use model portfolios, let's start off by just telling them a little bit more about your business and your discretionary fund manager.
Okay, thank you, Kapil. So, as a discretionary fund manager, we have a Cat 2 license. But before I even get there, I want to talk about the partnership between ourselves and Momentum Financial Planning. So the last 8 months has been such an exciting time for us. We've worked really closely with the MFP Investment Committee and your senior management to make sure that we build solutions that are fully aligned to your advice process. And the reason that's exciting is we're not trying to shoehorn your clients into a solution, but rather we've built solutions that talk to the way you, as financial planners, give advice. So going back to what a discretionary fund manager is, we basically are in possession of a Category 2 or asset management license. That allows us full discretion in how we manage portfolios on behalf of your clients. So what does this mean for you as a financial planner? There are basically 3 benefits to you partnering with a discretionary fund manager. The first is that our Cat 2 license allows us to bulk switch. In other words, we can make decisions across all your clients at the same time. So from a TCF perspective, your clients get the benefit of our decisions in real time. The minute we make the decision, we implement across all of your clients. The second is the ability to use our discretionary mandate to implement these decisions on behalf of your clients without needing a switch form. In other words, it frees up your time because you don't need to go and get a signed switch form every time we need to make asset allocation or fund changes within the models. And the third is that it frees up your time to give better advice because we become your investment team. So we basically become an extension of your practice. And for us, it's personal. That's why we've developed this in conjunction with MFP, for MFP and your clients.
I'm absolutely loving what I'm hearing. You already gave us 3 compelling reasons as to why to use a discretionary fund manager. Let's maybe pause. Are there any other reasons that you haven't covered?
Well, I guess as your investment team, the advantage is you've got a professional investment team making sure we have access to the best fund managers in each asset class and that they're appropriately priced. So another big advantage is that you get access to preferential fees. We use all the assets under our discretion to negotiate better fees for you and your clients. So you get the benefit of that. The second is the compliance burden that it removes from your practice. The legislation and the burden it's put on planners is just phenomenal. We've got RDR, we've got FACE, we've got FICA, poppies coming in on the 1st of July, and it just seems to be never ending. So you don't need to worry about any compliance or the applicability in your portfolios. We manage that on your behalf. We also make sure that we negotiate the best fees we can for the funds we use, and those are automatically loaded. So as our assets, our joint assets grow, you also get the benefit that fees might reduce even further. And the other thing that you get from us is you've got a professional investment team with professional portfolio managers and people who understand advice, working together with MFP's investment committee and with all of you as planners. We rely on your feedback to make sure that we implement what you need without you needing to know which funds you're using. And obviously it simplifies the book. And the better your book, the easier it is for you to succession plan and hand over the book as you decide to exit or retire.
Previously, our discretionary fund manager wasn't available for access to all financial planners, but today we are making it available. Previously, the minimum requirements were also that planners needed 300 million Rand assets under management to access these model portfolio capabilities. So, tell us a little bit more about the solutions we are launching today.
That's actually a very valid point. In the past, and in fact most discretionary fund managers will only manage portfolios for larger assets. And the reasons for it are numerous. But our partnership with Momentum Financial Planning allows us to actually roll this out to all financial planners. So regardless of whether your book is large or small, you will now have access to the models. As I mentioned earlier, these model portfolios have been designed specifically for MFP's advice requirements. So what we have done is we are launching 4 model portfolios today, and they have been designed specifically to cater for your clients' financial needs, right from short-term capital liquidity requirements through to clients who are looking for long-term capital growth. So today we are launching 4 model portfolios for you. They are called the MFP Focus Model Portfolio Range, and they're made up of 3 Regulation 28 compliant model portfolios, the MFP Focus 3, 5 and 7 models, and the MFP Focus 7 Unconstrained model portfolio. These 4 model portfolios are available to all financial planners and can be used in conjunction with the normal momentum focus range, as well as the income solutions that Kapil will tell you about to cater for all your clients' advice needs.
I think it's important to just clarify one thing quickly, and that is to say that don't confuse the momentum focus range, the collective investment schemes or unit trusts that are common to you and are known to you today, to the model portfolios that Fluff has just described. This is brand new. It's an industry leading and a first for momentum financial planning, and importantly, it has your name in it. That in itself is a first as well, and we're super excited to share that story with you today. Fluff. Now, I think the important order of business. Since this is a professional service that you're providing, surely there's going to be an increase in costs.
That's an excellent question, Kapil, and probably the question that we get asked the most by the planners. When you're looking at investment costs, you need to take into account the total investment charge of each of the underlying funds, as well as the discretionary fund manager charge. As you can see on your screens, when you combine the underlying fund charge together with our discretionary fund manager charge of 40 basis points, the total investment charge that your client pays is actually very comparable to other balanced offerings in the market. And in fact, in most instances, it's actually cheaper. Kapil spoke about the vertically integrated offering, and one of the benefits of that is that we look at charges across all levels. And he mentioned the Momentum Wealth platform. I'm delighted to announce that another big advantage for your clients is that we are able to give you a discounted platform fee, where we start the platform fee at 40 basis points instead of the normal 50 for smaller clients with assets of less than 1.5 million rand. Another first and a great benefit not only for you as planners, but more importantly for your clients.
Let's for a moment just pause and look at what's happening in the industry. And I think it's important to look at the retail advisor and their clients in terms of how they approach investing in a contract. There's this concept called split funding. Let's maybe quickly describe what split funding is. Split funding is a concept that says you have access in a client contract to a Momentum branded fund, but it is shared with other funds. So you've got Fund A, Fund B, Fund C, and that basically makes up your client contract. That is in a nutshell what split funding is. Now, when we take into account this concept of split funding, it's important to recognize that what we've seen with the study that we've done on our own platform, that generally there isn't a single solution for a single client need in a client contract. And there are reasons for this, which Fluff is going to unpack for us shortly. But I think it's important to highlight what the stats reveal. Essentially, what they say is that clients and through the advisors typically asset allocate across multiple fund managers, but they don't only do it at a fund manager level, the description I gave you earlier, they also do it through the vehicles that they use. Be it a structured product as an example, be it a fund of fund, which you are familiar with, as well as now the introduction of model portfolios. And it's important to then be able to understand the differences of these. So Fluff, maybe if you can help us to just understand the nuances in a split funded approach between a fund of fund and that of a model portfolio.
So I think the most important thing you need to be aware of is that when you as a planner split fund, the funds you are picking might not all be designed to meet your client's specific outcome. If you're using a normal balanced fund, they might be solving to beat the peer average. Whereas if you're using a Momentum fund of funds or the MFP model portfolio range, those have been designed with your client's outcomes in mind. So split funding doesn't solve necessarily for the outcome you're trying to solve for. The second thing is that the reason people tend to split fund when they use different funds in the fund of funds world is because they see the Manco name. In your example, Kapil, Momentum focused range. That doesn't mean that it's only the Momentum investment team managing those portfolios, because we actually know that some components of the focus range are outsourced to third-party managers. The advantage in a model portfolio is that you can see all the underlying managers immediately.
Thanks for helping us to understand that, Fluff. And for those of you that are attending this conversation, don't worry, these are foreign concepts to many of us. We will be spending time with you post the launch to unpack some of this in more detail. And in the same conversation we're having with you today, Rupert is also going to take you through some more information. Fluff, are there any important other differences that we need to take into account when considering the difference between model portfolios and fund of funds?
I think the two most important differences are in the transparency that you get in the two, and also in CGT. So in terms of transparency, when you pick up a fact sheet for a fund of funds, you typically don't see the exact allocation to all of the underlying funds, and also sometimes not full transparency in terms of the fees, because the fee is encompassed into one entity. Whereas in the model portfolio fact sheet, you will see the underlying funds that each of your clients is invested in, and you also get the fee class that they're investing into. So there's a lot greater transparency. And then from a CGT perspective, a fund of funds has some advantages. Any asset allocation or fund changes don't trigger CGT. Whereas in the model portfolio world, it could give rise to a CGT event. Realistically, it's unlikely that we make any big changes through the cycle. They're normally at the margin, but you do need to be aware of that. It gives you an opportunity to decide which is most appropriate without having to decide on the underlying managers. That you would rely on us to do for you.
Thank you very much for doing that, Fluff. I've actually learned a few things myself, and importantly, those two factors are critical for planners to understand in navigating the choice between our fund of funds and the model portfolios. I'm sure, like me, you found that session incredibly intriguing. We're now moving on to the second conversation, and joining us for this one is going to be Dean D'Souza, our portfolio manager for these exciting capabilities. Dean, before we get started, I just want to almost throw the first question to you in a different way and ask you, is this different to outcome-based investing?
At its core, outcome-based investing has always been and remains anchored around three very important pillars. Firstly, a time horizon, which is the time required for the portfolios to achieve their different objectives. A risk budget, which is the risk tolerance per portfolio and or how much risk one is willing to take per portfolio. And then lastly, the return objective, which, as you know, would be aligned to your client's needs. These very important factors need to be balanced to ensure an optimal client experience.
So what I'm hearing from you, Dean, is that outcomes-based investing at its core and in its DNA is no different, and the way we're choosing to execute on it through model portfolios and through fund of funds is where the only difference lies. And to our conversation with Fluff earlier in the conversation. I want to move the conversation to a very practical sense. We are in this low return environment, as we know, right? So it's important to understand what the implications of this are in the context of the solutions that we're putting down. So Dean, in the context of our portfolios and using outcomes-based investing as a philosophy, how do we navigate the kind of environment that we are in at the moment?
Thank you, Bill. I think it's very important that, as I said, outcome-based investing is still our philosophy and does not change. But that's not to say that the way we articulate and execute outcome-based investing doesn't need to change. As with any asset manager, we evolve, we innovate, we adapt to make sure that we can still deliver the client outcomes in this low return environment.
So Dean, what does this practically mean for an MFP planner when he's sitting in front of a client giving advice?
I think what this firstly means is that we had to adapt to this new normal in this low return environment. And we try to avoid the typical knee-jerk reactions that clients tend to make. And that is one of the biggest benefits of an investment team that is aligned to the MFP advice process. We can ensure that the portfolios and the advice process are completely aligned throughout the investment journey, despite the low return environment, to ensure that irrespective of the market environment, these portfolios remain relevant and they continue to add value to you and your clients. And let's not forget that throughout this process, you will continually have support from the MIC investment management team, as well as the investment BDM support through Rupert Gissing.
Dean, you made some very interesting points here, and I think it's appropriate to quickly just summarize and pause on these. Guys, market pandemics will happen, and we will go through various market cycles like the one we're going through at the moment. And Dean highlighted the importance of staying resilient to the investment philosophy and ensuring that your clients stay invested. This is a journey we will help you with. And one important snapshot that we should pause on is the importance of understanding the three-factor approach that Dean spoke to earlier. The time horizon that we need to get to the return that your clients and you put together that you're required to achieve, and importantly, the risk budget associated with that particular portfolio. Now, in a low return environment, it's important that we spend time in the portfolio construction process to give ourselves the best chance at being able to deliver what we commit to doing. And remember, these aren't guaranteed solutions. So, Dean, maybe help us. Tell us what that construction process looks like.
So as you have already noted, we have defined these objectives with MFP in mind, in partnership with MFP. we have created these objectives. But how do we articulate those objectives? And we do this in a 3-step portfolio construction process. The first and most important step is defining the strategic asset allocations. Given that asset allocation is the primary driver of your returns, this is the proxy for those objectives, and this gives us the best possible chance of achieving the risk and return objectives we've set out. The next step of the process is looking if there is any way that we can enhance the returns that we get from the different asset classes, and we do this by way of strategy optimization. This is the choice between active management versus passive management, or a combination of both, which is reflected through smart betas. So, for example, in equities, you will be familiar with momentum investing, value investing, and quality investing. Or in the fixed income space, there is duration management, yield curve management, alternative asset classes, or credit. Within each of these asset classes, we look at the combination of these strategies to see if we can enhance the returns that you would typically just get from the market. If we do not believe that the use of an active or smart beta strategy can enhance the returns that we have modeled for in the strategic asset allocation process, we will default to a passive execution. And the final step of this process is the fund or manager selection. This is where we pick the optimal fund to execute on the strategy or range of strategies that we've identified in the second step of the process. Now, this does not mean that we will go chase the top performing funds or the top performing managers. Rather, we will choose the most appropriate managers to execute on those different strategies, because this will ensure that the portfolios behave as we've expected. And if the portfolios behave as we expected, we can then ensure that all the modeling comes together and your clients have the best possible chance of getting to the outcomes that we have defined in conjunction with MFP and to your advice process.
Let's now talk about what we are going to be launching to you today. Dean, tell us about the portfolios.
As Flof has mentioned earlier, we have made 4 model portfolios available exclusive to MFP planners. These are 3 Regulation 28 constrained portfolios, as well as an unconstrained portfolio. Now, the first thing you will notice is that within each of the asset classes, we have used single asset class funds. This is because, as I mentioned initially, asset allocation is the biggest driver of returns, and therefore we have stuck to single asset funds to ensure we have control over the asset allocation and to ensure that that asset allocation is aligned to the objectives we have defined with MFP. Now, you'll also notice that we use those same managers across each of the portfolios. This is because their allocations are guided by the strategic asset allocation. So, even though you see an equity-only fund in the Focus 3 portfolio, the overall allocation to equity in the Focus 3 portfolio would not be significantly different to a typical low equity fund that you see in the market. I think the second point that is also relevant to highlight is the fact that there are a few momentum solutions in the portfolios. Now, as an independent discretionary fund manager, we would never compromise the investment integrity. And so, any momentum solution that appears in the portfolio sits there by merit and has undergone the same due diligence as any of the other funds. And in fact, one of the additional benefits we have is that because of our partnership with MCI, we can create and use solutions together that enhance the overall integrity of the portfolios. And just to touch on a couple of the managers, even though they are Momentum branded, they are still multi-managed, as Flof touched on earlier. So as an example, the Momentum SA Flexible Fixed Interest Fund is managed by Coronation and Prescient, 2 very well-known fixed interest managers, but also the Momentum International Equity Feeder Fund, which is managed by a global investment team, has some of the most world-class global asset managers underneath that hood. And so while the overall allocation to Momentum funds may seem high, the actual true allocation that is managed in-house is actually relatively small. And in fact, those are the capabilities that we are most proud of and would put in any solution. And I think the final point to note is that there is a combination of boutique asset managers, in-house funds, and well-established asset managers. And the combination of those 3 different types of asset managers ensures the most optimal portfolio integrity and gives you the best possible chance of achieving those outcomes.
Where does Momentum Collective Investments fit into this picture? The first thing you would have recognized is obviously the utilization of our funds in the Momentum Investment Consulting model portfolio solutions that you've seen today. But we haven't taken away our range of funds for you either. It's important to recognize though that we came from a world of in excess of 50 funds that are Momentum branded, collective investment schemes or unit trusts. What we've done to help you with this is to simplify our fund offering. There are now 6 funds. The Momentum Focus 3, Focus 5 and Focus 7 fund of funds that are available to you. And over and above that, we also have our cash and near cash solutions. Those are the Momentum Money Market Fund and the Momentum Enhanced Yield Fund. Those are our flagship capabilities, as you already know. And lastly, we have our Momentum Flexible Income Fund. Our Momentum Flexible Income Fund is the best representation of our fixed income IP and research, but also importantly, it brings together all of the multiple available classes of assets that are available in the fixed income space into one single solution, therein also simplifying our overall proposition to you. These solutions are available on both the Momentum Wealth platform as well as on Investo as the alternative platform that you use for recurring savings business. Now, where are the model portfolios available? And I think that's the last point that I want to make before we move into the practical conversation. And the model portfolios are exclusively available on the Momentum Wealth platform. They are not available on the Investo platform. Rupert, let's maybe help our planners to recap some of the salient points that we've described today and some others that we've thought about as well.
Flof did briefly mention earlier the differences between a collective investment scheme or unit trust as we more often refer to it, and a model portfolio or a wrap fund. What is important to understand is with a collective investment scheme, it is a legal entity in its own right, and the investor will purchase units in the collective investment scheme itself. Whereas with the model portfolio, as we have with the MFP focus range of model portfolios that we are launching now, the client actually invests or purchases units in the underlying funds. When a client invests into the model portfolios, either through new business or through a switch process, and the client looks at the statement, they will see the underlying portfolios. It is important to remember that when we make changes in a model portfolio, the client has purchased units in the underlying funds, this could potentially have a CGT impact. But because we do this optimally and at the margin, in most cases this impact will be almost negligible. Second very important point that I want to touch on is the investment mandate that the client has to sign for Momentum Investment Consulting in order to manage the funds, as we are a discretionary fund manager. This is important whether the funds flow in either through a new business process or through a switch. We always need the completed mandate, otherwise we cannot implement that specific investment. So that's quite a mouthful, but don't worry, if that sounds very complicated, I will be knocking on your door pretty soon in order to take you through the process and guide you so that you don't have to worry about anything.
Thank you, Rupert. I think there was some valuable insight that you gave to our planners. Now, importantly, we're bringing you another first. For the first time ever to Momentum Financial Planning, we've got specialist expertise on the ground in your office in the form of Rupert Hissing, whom you've now met, but also supporting Rupert in the field are two fund specialists, Emily Mahoko and Kirky de Kock, who will be joining him to helping you with this journey. Now, with that in mind, Rupert, I think it is important that we unpack your roles a little bit more clearly.
We heard you at Momentum Financial Planning when you've told us on many occasions that fund specialists and representatives from other asset managers and other investment houses often come to your offices, visit you and support you with their fund solutions. That is why I've moved over from a business development role in the Momentum Investment Retail Business Development area to a specialist role focusing solely on our investment solutions, and especially focusing on the MFP model portfolios in order to bring these funds to your doorstep, in order to ensure that you are comfortable with them and that you know, as well as our portfolio managers and our investment team, exactly what's going on in these funds on an ongoing basis. Remember, we are your personal portfolio manager and we are here for you, and we want to ensure that you are comfortable selling these solutions to your clients, knowing that we will give them the best possible opportunity in order to get to their stated investment objectives.
That's great, Rupert. Let's put our cards on the table now and tell MFP what is it that they can actually expect from us following this launch today.
What will follow the launch today is we will have engagements in a one-to-many and a one-to-one form where necessary. We will also be assisting you with book analysis and transitioning of assets into the model portfolios where you feel you need guidance and assistance in order to get you comfortable with these solutions. We will also be handing out a pre-launch pack which will include a Momentum Investment Consulting brochure and also a very comprehensive question and answer set that should answer most of your questions that you have. But if there's still questions that you have, and I'm sure that you are welcome to get in touch with me and I can address those, and we can set up one-on-one time in order to get you comfortable with the solutions, and let's get those assets and flows into our model portfolio solutions. Remember, we are your portfolio management team and we are here for you.
So, to Momentum Financial Planning, you have now heard Rupert. And the fact that all of the support is available to you, I implore upon all of you to use it. It's there for your benefit, it's dedicated to you, and we are super excited to be on this journey with you, as I said earlier. Look forward to the amazing work that's going to follow this launch, but I'm hoping that, like this whole entire setup has been, that you feel the excitement with us. Now, to wrap things up for us, the moment of truth for our Head of Discretionary Fund Management, Momentum Investment Consulting, I'm going to hand over to Floff. Thank you very much.
The bit I'm most excited about is the close alignment and partnership between Momentum Collective Investments, the Momentum Wealth local and international platform, ourselves as the MIC team, and most importantly with you, the MFP financial planners. We mentioned that we've put these together for your advice process. So everything we are doing is around enabling you to use them in the normal advice conversations with your clients. So when you're sitting down and want to apply the bucket approach, you can use an income or money market solution to address the short-term liquidity needs, and then a medium-term or long-term solution for clients looking for higher capital growth requirements. You can use them alone in isolation, or you can combine them. Everything that we have spoken about today has been designed to make the client experience for your clients easier, more importantly that they stay invested so that they can achieve their personal financial goals. For us as an investment team, it's personal. And we've designed these models and funds with that in mind. It's a client-centric solution, and we hope that your clients feel they are getting a personal experience from us. Thank you for your time.
For our last speaker, to tell you more about what this all means practically, I'd like to welcome Dani back.
Wow, now that you have seen this amazing proposition from an investment solution, remember one thing, that we also have other reasons why we needed to do this. So one is because we, as an FSP, are regulated by FSCA. We have onerous regulatory obligations that we have to comply with. Let me name you a couple and then you will understand. So one thing is, we need to prove to them that we have a proper process employed within MFP regarding investment advice. Then we need to prove to them that we have the sufficient resources, meaning that by yourselves, your knowledge and skills and all of that, plus processes, and then we need to back it up by showcasing to them that we have the technology that would enable us to fulfill on that. And then we need to prove that we can protect our clients against any negligence from our side not having that in place. Now, if you were to have all of that, over and above that, then we need to demonstrate that we have the suitable solutions that would comply with all of that. Now you can imagine, so if we were to, similar to the way that we need to convince you and your clients that we have this awesome solutions, we need to do it technically and factually to the regulators as well. And we are more than confident that we will most probably satisfy them by miles, because we have just leapfrogged in terms of where we were and where we and what we bring you today. You might want to know and ask the question, but how did we go about establishing what we've launched today? This was not just an investment house decision to congregate funds and then we launch it to you today. No, this was an amazing partnership that we formed between ourselves and the investment house to make sure we bring you the best today. So the first thing we did is we set up an investment committee. An investment committee then, together with all the expertise we have, created an investment planning philosophy, which we properly articulated in the context of financial planning. The second thing we did is we actually have and created a clearly defined risk profiling philosophy. And then we needed to make sure that the investment philosophy is fully aligned with the investment planning philosophy. And then we needed to employ the best possible management expertise. What is management expertise? It's people who can manage these funds so that they can achieve the outcomes in terms of what we would want as MFP for our clients and for our planners to ensure that we have all the comfort and trust we need. Yes, so this is why we are so proud of it, because we've followed a proper process and a responsible one to make sure that we have a responsible solution to you. By now, you would have noticed that we acknowledge and appreciate the amazing investment planning expertise you as planners have in MFP. And there are many of you who truly have investment knowledge and expertise as well. But this solution is actually for all of you. Because what we are doing here in terms of our partnership is bringing together our incredible investment planning knowledge that you already have, but then also even for you as experts and from an investment perspective, to partner with Momentum Investments, where we bring the best financial management and investment management expertise to the table. Now these two will make us significantly strong. So this partnership will enable you as a financial planner to focus on what you're good at. You are extremely good at actually having a client base which appreciate the advice that you give them. And you can now focus on acquiring those clients who are in desperate need of your amazing investment planning advice and showcase to them the amazing solutions we have so that you are comfortable and there's a lot of trust with these clients. This is an incredible partnership, and we're truly honored to actually do this together so that we can make your life, your practice, even worth much more and much stronger to grow your client base. Now that we've come to an end of a very exciting launch and solutions that we've offered you from an investment perspective, I need to tell you why I'm personally excited for us as a business, MFP, that would enable us to be the most professional, most accountable, and most competitive agency in this country. Why? Because the moment of truth is if you sit in front of that client and you need to do and make an investment proposal. What are the things that would give a client comfort and would actually build the trust is that you listen to their needs, you understand them. These are linked to that, to their terms and their life journey. And the last one is their expectations and what they think they should get in terms of investment returns. So that is when you present it to them. But more important, you know there's ups and downs after that. So we will empower you to do exactly the same. When you need to go back to a client, even in good or bad times, we'll be able to give you the support so that you can link it again to the needs, to their term, and to their expectations. And therefore, we are proud to know that we have something that we will be able to compete with world-class wealth management businesses and put you in a position to be proud of using our Momentum dedicated financial planning model portfolio funds. Thank you, and thank you once again for your partnership, but also our partnership with investments, because none of us is as good as all of us in terms of putting all our expertise together. We will be having a winning formula. Thank you.
We've come to the end of our session. I'd like to thank each of the speakers and you, our partners, for attending the sessions. From what we've seen, I think we all agree that the changes are enhancements to drive all our partners in the value chain forward, keeping in mind what really matters most to us, which is achieving our clients' goals, because for us, it's personal. From us at Momentum Investments, we'd like to extend an invitation to talk to us and let us know where we can help you. Please keep safe, and we'll see you soon.